Assalamualaikum everyone. This is Yaur Zaman, Head of Equities. I welcome you all on behalf of Pearl Securities to this investor briefing session. Today we have company Park Electron Limited, and the speakers include Mr. Manzar Hassan, who is the Chief Financial Officer, Mr. Nadeem Asghar, who is GM Corporate and Treasury, Mr. Umar Farooq, the Company Secretary, and Mr. Wasim Mir, the Financial Controller, who will be giving us a short presentation on the company. So I would like to request Mr. Wasim Mir to please start the presentation.
Thank you, Yaur sir. Assalamu alaikum to every participants. I am Wasim Mir, working as financial controller in the PEL. In the next few minutes, I will take you through the presentation of the PEL as an introductory. Starting its introduction. Starting the introduction, first the PEL introduction starts with the introduction of the Segal Group, which is a century-old business group. Obviously, started their footprint in the business some 100 years back in the Kohinoor rubber, and then on we say that on the request of the Quaid-e-Azam, the founder of Pakistan, they moved their textile setup to Pakistan, and literally there was the first group, we call it the first LC issued by the State Bank of the Pakistan was to this group. So this is their history and their profile, which is a century old in the business, and they have been gone through the different set up different businesses in these times and run those businesses very successfully in the periods they've been into the textile, into the banking, chemical, sugar, engineering, cement, and real estate. If we specifically talk about the PEL, PEL was actually founded in 1956, where the majority Segal Group acquired their majority shareholding in 1978 and diversified into home appliances market into 1981. Initially, it was a power equipment manufacturing company. Today, group on today's time, the group is also is in the business of consumer goods, power appliances, textile, and real estate. Coming to the PEL is in every Pakistani home that we claim, and PEL is a pioneer manufacturer of electrical goods and the home appliances. In power, we have a range of product, and the namely are distribution transformers, power transformers, energy meters, switchgear. We develop the grid station and we take up the EPC project, which are the engineering projects. In appliances, we have a project page which comprises of refrigerators, air conditioners, deep freezers, microwave ovens, water dispenser, televisions, and washing machine. This PEL is helmed by chairman Mr. Naseem Segal, and our CEO is Mr. Murad Segal. Both are very seasoned industry professionals. PEL Appliances business has an extensive nationwide footprint with a little over 1,500 dealers all across the country. We have 30 sales offices in different cities of the Pakistan, and we also are operating through more than 500 authorized service centers, which are providing customer services in these respective areas. We talk about the shareholding of the PEL. Segal family holds almost little over 50% of the shares, and the Segal family majority shareholder of the PEL is one of the most prominent business families in Pakistan. Mr. Naseem Segal is the current chairman of the Segal Group, including PEL, and holds a 25% stake in PEL. The rest is with 21% is with general public. We have Mudarba and funds. We have insurance companies in our shareholding. We have foreign companies, which is almost now 1% now, and we have also some other shareholders in our shareholding pattern. We talk about the business segments. 53% of the revenue is coming from the appliances division, which I already mentioned the product range. We have been into the manufacturing and selling of refrigerators, air conditioner, deep freezers, microwave, washing machine, water dispenser, television, and 47% revenue is coming through the power division, which mainly comprises of distribution transformers, power transformers, energy meters, switchgear, grid station, and EPC. So this is a complexion of the Segal Group and the PEL in a broader term. Moving to the next, this is a little evolution and key milestones of the group, of the company, which have been achieved over the years. As told earlier, in 1956, it was incorporated as Park Electron Limited. In 58, it got a collaboration with the Germans. And in 1978, Segel Group acquired a company with the major shareholding. The appliances business. 88, we got into the listing, stock exchange listings, and then the journey continued until 2018. We have been through the various developments in the products and the segments. We have been into the today's position where PEL is positioned as a major business setup in Pakistan. With a little overview of the appliances business specifically, I'll take you through first on an economic outlook of the Pakistan. We have been looking that we have in 17 numbers, we have already been into 1 trillion GDP. So it will give you an complexion and an outlook that how this industry and the demand of our products will be sustained in the coming future. And this industry will keep its footprint and foothold in the current business. The GDP is growing. Like in 2025, we have been have a forecast of 7.3% CAGR. That growth will be coming expected. These are the expected numbers. We have a younger population in Pakistan. Like 35% of the population is in the bracket of 15-year-old. So means we have a growing population, and that is also a growing number of customers we can assume for ourselves. Our per capita GDP is falling in the bracket of $5,000 per person. And in an international survey, if you look at the consumption pattern of the general public, which are falling into the bracket of $5,000 to $10,000 bracket, they usually move their spending to the useful commodities, which comprises of beverages, education, and appliances are also been fitted by an international service, which is a useful category of the products. And our GDP is at the moment is in that bracket where currently it's 5,000, is growing to the 10,000 brackets. We are into the useful category of the spending of the consumer. So we believe that our economy is suited for a healthy number of population which are ready to spend on the appliances with their current capacity of spending. So this is an economic outlook for the sector, that we have a growing GDP, we have a growing population, we have a growing per capita GDP. So there will be a appetite of spending will be available towards appliances in the economy in the coming years. And if we talk about the size of the power consumer electronic markets, it's currently a 181 billion estimated value market in Pak rupees, which amounts to 1.2 billion rupees. And segregating into the appliances, we say that refrigerator is around 75 billion, microwave is 4 billion, and water dispenser, then ACs are other major market, which amounts to 55 billion, washing machine as 20 billion, and deep freezer is about 15 billion. We have screen appliances, which are TVs and LEDs, also amounts to 25 billion. So this whole electronic market is around 181 billion, which is growing since 2005. According to a Euromonitor, TV, AC, and refrigeration are expected to grow faster than the other low penetration and the increasing demand towards these products of the consumers. Taking you to the next, specific to the PEL, if we talk about the major products of the PEL, like refrigerators, we have a 22% of market share almost, and it's a market of around 1.6 million units, which with a current penetration level of 51%. Average price is given, that is again into the reasonable spending range of middle class, which is around 42,000 rupees as a selling price, you may say, which carrying at the moment. Average life is given of that product. So all these in air conditioner, like we are on the lower side, we have the 8% market share, but it's Overall market penetration is also on the lower side, 15. So it's a good market to grow, and we the PEL is also looking to grow with the market. So the average lives and the market shares of the products are different. Are mentioned already. In washing machine, we are new entrants. We have recently started that. We have 2% market share. In water dispenser, we are at the 15%, and at LED also we started in 2.5 years back. So it's a 6% market share we have acquired. So it's still a low penetration market, except washing machine has the highest. But still, it's there are some changing technologies in that. So we have also cushion in that. So its slide is meant to mention that we have a low penetration market, which still has an appetite to grow. And we are all aligned. We are also given at the bottom of the slide 5 years next penetration level, which all are growing. Like in ref, it's growing 51 to 53%. In ACs, it's growing. And also if you look at the absolute numbers, the number of units are also growing. So if we sustain with our market shares, the PEL is bound to grow with these numbers. These are the more specific product-wise market share we have mentioned in each product of the appliances division. Like starting with the ref, we are having a market share of 24%. Of course, higher is the market leader in this with 30% share. In ACs, we have a 10% market share. With the higher again is a leader in this, 28%, and to agree with the 25% is a major player. In deep freezers, we have a 22% market share, and in that segment, Waves happens to be the market leader with 33% share. In televisions, we have just entered recently. We have 8% market share, and Gree and Haier and Changhong, Ruba, Orient, these are the TCL is the major players in that category. Water dispenser, we used to have, are actually the market leader with the maximum share is a 20%, 27% we have, and rest is with the other supplier. So is the microwave, where obviously Tollens is the market leader with 47%, and PEL is having a 12% market share. What we have a punchline for that PEL, formidable player with strong market share across all categories, target to be in top 3 brands within each category by 2023. That's our punchline, and that's our target, and we have been moving with that for the near future to capture and hope to be coming in the future times. Then again, this grid defines the appetite of the electronic markets, which is supposed to grow by 2026, and what will be the drivers for that will be that we foresee that there is an urbanization being coming in the society very quickly, with the 0.7 million incremental houses requirement as per the State Bank or whatever the recent studies have been done in the real estate sector, that there is a dire need. Even it has there is a number of 1 million is also around the corners, that we have a housing requirement, new housing requirement in the country. Then demographics are there. I suppose this number is even more, that 0.3 million marriages per year is happening. So the new families are coming up. They are more requirement for the appliances to come. Category penetration is where you upgrade your lifestyle. You have been moving from the lower category to a higher category. So you have been changing that. Then there is a product replacement life cycle. Every 10 to 12 years, you have to replace your appliances. So these all are factors contributing to the home appliances market to grow and to sustain. And this will be this industry has no future threats for continuity, for that matter. Then we have further to explain that what we have been doing on our capacity and capacity building to grow with the market. This is our footfall in all across the countries. There's supposed to be 2,600 dealers all across the Pakistan, which have been doing, obviously all appliances business is happening through a dealer network. So there are supposed to be 2,600 dealers all across Pakistan, and PEL is dealing with 1,513 out of those dealers, which is a sizable number. And we have our sale offices in 23 cities, and we have 23 city service centers in also in 23 cities. And also for the after sale services, we have been operating through 524 authorized dealers to serve the customers in an after sale. The map is also showing the province-wise population and our dealer presence in those areas. So it's equally matched. Like in Punjab and Sindh, almost resides 82% of the population of Pakistan, and we have around 87% of our dealers. We have been operating in these two provinces, and obviously we have a strong footfall in KPK. We have been doing, good numbers have been coming from there as well from us. So it's all strategically located. The network of dealer service center enable PEL to reach a wide universe of customer and provide quality after sales services. So this is to mention the state of the art and when invested in manufacturing footprint, like we have been reducing, like we are bringing the labor cost efficiencies all the time, and process automation is our drive to bring in our manufacturing to make it a state of the art production facility. We have these mentioned production capacities for on annualized basis, and what we have been currently achieving as a percentage of those installed capacities. We have to achieve, to improve by the 2023, we have in targets, and then by 2025, we suppose if the market grows as per our previous assumptions, then we may be needing a further capacity enhancement. The way forward, the new category and the multi-tier, which we have recently entered, what markets we have entered into. That is a one LED market we have recently entered. What the appetite in that market was, that's supposed to be 1.2 million units size of the market, out of which we studies suggests that half of the market is coming through a gray channel, and the half of is the organized channel. So if government policies improves, which are improving, that gray channel is tapped, and it all 1.2 million market comes to a regular channel, regularized channels, then I think the opportunity grows, doubles for the manufacturer who have been doing through the proper manufacturing through proper manufacturing facilities. So what the market composition is, that 71% is people have the 22% have the LCDs and LEDs, which have been the consumers are using those products, and 7% is just a smart TV at the moment, as that is a market product composition in the market. So these all are being replaced, that the traditional CRTs are being replaced with the LEDs and smart TVs, which we have entered into. So there is a large opportunity and appetite in the market for this segment to grow, and so is the PEL has this opportunity to cash on with its production capacity, and what we have been entered into. So it's a replacement market of around 20 million units, we suppose, which is which has in near future will come as a business opportunity. Then we have entered into the washing machines, which is again a 1.7 billion market. 1 million is a tier 1 branded market, and 0.7 is the mushroom, which are the local low price brands. They will remain there, but still there is an technology replacement where, like you say, that there's been shift from normal washing machine to semi-automatic and automatic washing machine, and we have entered into that segment of the market, and that is on a high replacement side, where the demographics have been shifted to the high-end products, and we have entered into that segment. So this again a market we have been targeting, and these are the two recent products we have added to grow for that matter. So again, in ACs, we also believe there's, as mentioned in earlier slides, this is a low penetration product, which is just a 15% of penetration. As the penetration will grow, the demand and the people converting to ACs have been sizable. Like 1.1 million being imported at the moment each year There's a value growth of 20% in that. Penetration is low. So these are all the opportunities which will increase the market size. And also the government is on the policy of localization, where all components should be locally produced. So that is also is an attraction where cost will be reduced and the margins will be improved for that matter. We have been into the multiple brand policy, where in AC's market, there have been 3 tiers which have been working. One is the high tier, which is normal, is the major shareholders are green and higher in that segment, which are a high price and premium market. We have also entered into that segment with the collaboration of Panasonic. We have introduced a Panasonic brand in that segment that has been doing good. Otherwise, majority of our market share is in the middle tier, which is a 500 units market, and major players are operating in that segment. We have been competing with Kenwood, Orient, Ollens, TCL, and Pell is there. And then there is a lower, which is a Changhong, which is slightly on the lesser side. So this is how the Pell Appliances division is concluded, with its opportunities, with its footfall, with market growth opportunities, and what Pell have been targeting for the future. Then there's a power.
Can you wrap it through a bit quickly, because there are questions coming up?
Yeah. Just a slide with the power division. Power division, we have a end-to-end power value chain. We have started from power transformer, which are installed in the grid station. Then we come to the distribution transfer, which normally distributes in the societies and the local. And then we have energy meters at the doors of the consumers, and then obviously we are in the houses with the home appliances. These are the market division. Pell market shares are also mentioned for each product in the power. In power transformer, we are the market leaders. We have a majority, 75%, and in distribution transfer, we have a 25% market share. Switchgear, we have 25%. Energy meter, we have 18%. And with the government spending, its outlook is looking very positive at the moment. So these are all mentioning the features of the product. We have a certain certifications from the acclaimed labs of all the products, which is very vital in the power product sales. And then little about the financial overview. We have 9 months results been published, where company has already achieved a 42 billion revenue in year 2021 9 months, which is already a almost 46% increase from the last year's, and that outlook is looking positive. For the year 2021, we have achieved a profit of 1.3 billion post-tax against a loss of 172 billion the previous 9 months of the year, which is a substantial increase. Obviously, the last year was a COVID year. Even it's by revenue, it's a very positive year for us. We have a comparison of 5 years in the bottom with the product-wise history. It's all been growing. Like in the recent 3 years, you may say we dropped a bit. Then now we are picking from year 2020. And there's also a quantitative schedule in the right side of the screen. We have been what numbers we have been selling in each product category. Like we have been around 300, although it's a 2021, it's a 9 months number. We have sold 307,000 fridges. Air conditioners are also touching 100,000 mark. Deep freezers are there, other distribution, and power transformer is performing very well. Like its number, you can say it's the highest number in the last 5 years we have sold in this year. And it's again a 9 months, and in 12 months, you may find it better. So thank you very much. This is all brief about the Pell. I may hand over for the question and answer session.
Great, sir. Thank you very much, Wasim sir, for the very detailed presentation. Now the floor is open for the question and answers. Few people have raised their hands. Raza Inam from MCB wants to ask something.
Yes, sir. I have a couple of questions. My first question is that can you give a brief overview of the dynamics of the appliances industry? Because recently we saw that higher engage in price competition and price war to increase their market penetration. So what is the scenario now? And have the margin and the normalized and the industry in equilibrium?
Yes, normally the price increases take place generally in the peak season, or in the off-peak season. The price there is a gap in the price increase. As the 67% of the sales take place in the first half, so the price increase is possible at that point of time. So there is because of the increase in the volume, we have been able to achieve the margin at absolute value, but on the percentage side, there is a slight slowdown in terms of the margin achievement. And that is covered mainly through the quantum increase in the sales volume.
Okay, so my second question is, after the recent right issue, it will obviously improve your working capital and debt ratio. So what sales target, what sales are you looking in the appliances and the power division for CY22?
You know, for example, in 2021, we have achieved a top line of 55 billion rupees. And in 2022, we are targeting a sales of 72 billion rupees. So this is basically an increase of around 31 to 33% of the increase in the sales top line. And this comprises mainly of certain increase in the prices, like the dollar has increased from $160 an average of 2021 to 175 plus 180 in 2022. So there is an element of increase in the inflation, but the majority sales increase is coming from the volume side, because we are increasing the volume of refrigerator, distribution transformers, energy meter, power transformers, and so on and so forth.
And would you expect the margin to be better than it was in CY21?
I think in power division, the margin are likely to be improved further because because of the increase in the power transformer side, and we are the only player in power transformers. So the pricing is really fantastic, I would say, in power transformers. And in case of distribution and energy meter and distribution transformer and switchgear, the pricing is, we are getting all the increase in the prices have been covered. All the increase in the material cost has been covered through the prices. So we are reasonably well placed in power. As far as appliances is concerned, AC is quite adequately covered because we have achieved more than what we have targeted last year. So we are expecting that the international will be adequately covered because it is basically 80% of the sales take place in the first 6 months. So we would be adequately covered. In case of refrigerator, I think the volume will trigger the basic increase in the margin.
Okay, thank you very much.
Similarly, in case of power division, we are working on contract basis, and the contracts are of smaller tenure, and the price are passed on accordingly.
Yavar, you are mute.
Yes, sir. I think Bilal Asif from National Bank of Pakistan wants to ask something. Yes, Bilal, please.
My question pertains to power sector, power distribution segments of yours. You have a ban by some international donor agency like World Bank. Can you update some status on that?
We were barred from participating in World Bank related tenders three years ago, and this bar has been lifted in February 2021. So that period is over, and we are participating in each and every tender taking place. During this period, which was spread over a period of 33 months, we can tell you that hardly any order was placed from World Bank. World Bank has not placed any order during that period, luckily for us. In case of all local tenders and ADB related tenders, we participated and got the tenders of merit. So there was hardly any effect of loss of sale sort of thing on account of World Bank tenders. So we are lucky enough. There is no ban.
Secondly, what is the status of currently demand of the power segment, like from WABDA and KE and
it's really huge. You know, if you look at the generation side, the previous government has also invested a lot on the generation side. In case of the distribution, the real problem is on the distribution side, and we are into the distribution equipment business. So the demand is really coming up at a very large number, and we are almost touching our capacity to meet the requirements of the power division, especially in power transformers, distribution transformers, and switchgear. We are very close to our capacity, and we are thinking of capacity enhancement if this demand continues in the same manner.
We are in fact cherry picking our contracts in power division.
At this point of time,
last question.
Mr. Nazim was telling that at this point of time, we have almost 11 to 16 billion rupees of orders in hand. for the appliances, for the power division. And our budget for the year 2022 is like 23 billion. So out of 23 billion, we have 16 billion of orders in hand at the start of the year. So we are adequately, more than adequately covered. Rather, we are spreading our deliveries to match our capacities. Our real problem is the growth which is coming in, which is a good problem to handle in the power division especially.
Last question is, your factory is quite close to the residential areas nowadays. And are you planning to shift that factory outside major districts or what? And just like packages, you can convert your factory into a commercial viable mall or anything. Any plans for that?
Yeah, we have a unit 2 basically, which is spread over 63 acres. This present facility which is within the city is 32 acres. So we have shifted most of the products of power division over there, and it initially was microwave oven. This has also already been shifted. So we are under a shifting plan. I think in 2-3 years time we will be able to shift the whole of the appliances division as well to that area, to those premises, and this will be used as a storage house, warehouse.
Current place will be used as a storage house rather than a commercial viable
I
something else.
think in two years time. The refrigerator will also be shifted. Part of the refrigerator has been shifted this year, and the remaining will be shifted early next year.
Okay, thank you.
Waqas Mustafa from HBL Asset.
Hi, thank you. Thank you for the great presentation. I have a couple of questions. First one is like, what's your average annual working capital expectations moving forward? And how are you actually planning to reduce the net cash conversion cycle? Like currently it's approximately 200 days, and the inventory cycle and the receivable cycle is so high. Secondly, yeah, and another question is, what is the pricing mechanism in the power division, and how long does it take to pass on the impact of higher raw material costs, freight costs, and any exchange losses in the power division? These are the two questions. Thank you.
The first question is really very interesting because the whole of the resources of the company are basically deployed towards achieving the working capital requirement of the company. The average requirement of working capital is basically 32% of your top line. So our working capital requirements basically moves up as the sales target moves up. For example, from 55 to 72 billion rupees. Our target of working capital would be from 17 billion in 2021 to something like 19 to 20 billion rupees in 2022. So it is directly proportional to the amount of the sales which we are taking place. As far as the total cycle, how we can reduce the cycle of the overall cycle, our inventory is basically dependent on the imported material. So I think this cycle is not likely to be reduced in a shorter period of time because we have to maintain inventory and import inventory from abroad, and we are the one who are operating on credit in appliances division. In the power division, the credit cycle is reducing a little bit, mainly because of the sales in the private sector are on the rise. And the sales from the private sector are basically mainly on 50% advance, and the remaining has been done before delivery. So the operating cycle in private sale of power division is on the improvement side, but I think that we may continue with rest of the working capital cycle in the same manner in which we are doing at this point of time. With respect to the pricing, you have talked about the power division. This is based on the tender to tender basis, and the span of the tender or the order which we receive is around 4 to 5 months. So we adequately cover the dollar price in those 4 to 5 months based on the projection which we assume at the time of the pricing of the goods. The power division is quite adequately covered with respect to all the dollar changes. With respect to appliances, there is always a gap. As I have already told you that in case of peak season, we are adequately covered with the prices, but in the off-peak period where 33% of the appliances sales take place, there is a slight gap in terms of the price increase. Thank you.
So during what if the exchange rate fluctuates during that period? So on the power division.
The exchange rate is the one where, for example, in 2021, our annual average rate was 160. And in 2022, our annual average rate would be around 175 to 180 rupees a dollar. So we have based our price based on the fluctuating dollar, which ranges from 160 to 185, $180 a piece. So we are pricing our base accordingly by adjusting the increase in the dollar in the rupee valuation.
Perfect. Another, sir, one last question. Like the major raw material for the appliances, is it, I believe it's the CRC. So are we importing the entire raw material, or do we use some local CRC that is available?
You know, we are
The
importing
flexible-
something like 70% of the raw material from abroad. The CRC is partly obtained from Pakistan.
What you
as well,
get
but
from ISL.
ISL, but CRC is not the major material. For example, compressor is the most expensive material which is used in the refrigerator or air conditioner. It has been imported from abroad.
Perfect. Thank you so much, sir. That's it from my side.
Fahad Sheikh from EFG Hermes.
Thank you. Assalamu alaikum, Manzar Saab. My question is more around the competitive environment that you're seeing on the appliances side. Obviously, everyone is facing cost escalations, whether it's the rupee, but all commodity prices are going up. Are you seeing your bigger competitors also increasing price? Is the pricing environment rational? Is everyone pricing these cost inflation into their prices yet or not?
I think in appliances, most of the people are playing with the volumes. For example, I have already told you there is a gap in the price increase in appliances, and that gap is basically being absorbed through the volume increase. Anyone who is going with the volume, he covers the gap in the pricing through the volume. So, for example, if you look at the absolute amount of gross margin which we are achieving, it is increasing day by day. But on a percentage term, it is either constant or it is on a slightly declining side. But decline is basically on the percentage side, but in absolute rupee term, it is on the rise in case of any of the major competitors, including PEL.
Perfect. Thank you. And just one more. The power transformer side often tends to be quite bulky. It's a big priced, big margin product, and often year to year you get a lot of volatility. In terms of the orders that you have right now, how long of a visibility do you have on the strong demand? Is it a year out, or do you have visibility even further than that?
For example, in case of power transformer, we are covered till August 2022. So in remaining 10 to 11 months, we have to cover just 5 more months. So it is almost adequately covered for the whole of the year. In case of distribution transformer energy meter, we are adequately covered for 4 to 5 months as well. So I think order intake is not an issue in power division. It is basically the delivery and the timely delivery within the requirement of the customer's requirement.
Perfect.
So it is going really well. For example, in case of power transformer, I think this year we are likely to touch, just in power transformers, which are used in the grid section, over 10 billion rupees of revenue, just in one product. This will be the second highest product after refrigerator.
Thank you, Manzar Saab.
Sir, we also have received some questions through the chat box. Hassan Raza is asking, can you talk a bit on your refrigerator segment as shown in the presentation? As volume were 465K in 2017, and the volumes are almost flat right now. So could you please shed some light on it?
If you look at the overall growth this is quite stagnant at the moment. For example, the total volume number is almost the same. And what has happened in the last 5 years or so, that's Haier has snatched the volume to quite an extent. Haier from nowhere 5 years ago has become the market leader almost in refrigerator. So they have got the volume to quite an extent, and that's why the numbers are not on the rise. Rather, in certain years it has declined a little bit.
In terms of gross margins, do refrigerator provides higher gross margin, or is it the air conditioner segment?
Refrigerator has a higher gross margin than air conditioners, but at the same time, refrigerator has some more costs associated with it as compared to air conditioners. For example, last year we have witnessed better profitability in air conditioners than refrigerators. But on an absolute term, refrigerator is the major contributors of the profit and the gross margin.
Okay. And Mohammad Tahir is asking, what is the purpose of recent right issue of the other company? Can you tell us percentage-wise utilization of funds?
Nadeem, can you put some light on this?
The majority utilization of the site will be for working capital. As informed by Manzar Saab, that our sale during 2021 was 55 billion, which we have recently achieved, and our target for 2022 is 72 billion rupees. So the main purpose of this working capital will be to meet our working capital requirement, and immediately we will reduce our debt by applying these funds into our working capital line, and then when required basis, we will use them to meet our working capital requirement.
Okay. And what's the update on assessment of fire impact and determination of extent of losses?
The fire matter has been over. It occurred in April 20, on the 25th of April last year. And our production team has managed very well. I think in 2 weeks' time, the production facilities were ready. Although they were not ready to the extent of the full production, but they have started the production in 2 weeks' time. And I think within 1.5 months, they have reached to the capacity level as well. So we have lost certain units during that period. I think that is to the extent of 15 to 20,000 refrigerators. But we have tried to cover that in the remaining part of the year, and we have managed a little bit the price of the refrigerator as well, because it is dependent on the supply and demand. So we have adjusted our price accordingly to some extent as well.
Okay. Shabi is asking, are you bidding for heavy electrical complex as well?
Yes, we are in the race. We were the only bidder at that point of time who deposited the deposit money as well at that point of time, but they have extended the time again for 1 month. So we are in the race.
Great. And Amir Hamza from Taurus asking, please repeat the portion of sales that is usually sold in the first 6 months.
It varies from. Sorry, Naveen?
The portion of sales that is usually sold in the first 6 months of the year.
It is basically 2/3, 1/3 split between first half and second half.
This is basically applicable in case of appliances. Power is almost evenly spread. It is almost 50-50 between power and appliances. It is 2/3, 1/3.
Okay. The Noel Paul is asking, I think you have already addressed the right issue concern. And now Fahad Sheikh again, I think raising his hands, he wants to answer.
So I'm sorry, I forgot to lower the hand. I'm fine on my side.
Okay, I think that's all from the participant side. One more message from Hassan Rada. What are the key challenges your business faces at present?
I think the key challenges are the same with Pakistan is facing at this point of time. Pakistan and PEL goes together normally because the major challenges are the currency fluctuation, commodity prices, and the interest rate. So these are the 3 major challenges which PEL always used to face, either in the past or even in the future as well.
Another challenge which is good to handle is growth.
And rightly said by Mr. Nadeem, the growth challenge.
Okay. So I think that's all from the query side. And so finally, if you want to add something at your own.
I think the things are moving quite well. With this equity injection, we should be able to meet our growth target quite satisfactorily, inshallah. And the target is to reduce our burden of debt, and the rising cost of interest should be addressed with this equity injection. So I think we are here basically to manage the growth of the company. It is taking place at quite a high level. For example, last year we have achieved 43%. This year it is 31%. It is mainly contributing from the inflationary impact as well, but there are volume increases as well. So we are keeping our fingers crossed to achieve these growth targets, inshallah.
Great. Thank you, sir. It's been a pleasure hosting esteemed management team of PEL today. Thank you very much, Manzar Saab, Nadeem Saab, Umar Farooq Saab, and nice presentation by Wasim Saab. Thank you all for being here and taking the time to participate in this virtual meeting. I am looking forward to hosting the management in near future to discuss company's progress. I wish you all the best. Allah Hafiz.
Thank you.
Thank you. Yeah. So, thank you very much.